Hey Bowtie Nation, Joseph Hogue here, and a great video on how to use technical analysis to help you know exactly when to sell a stock. I'm going to turn it over to the resident stock trading expert, Thomas Carver, for a great tutorial on when to sell, including how to avoid that fear of missing out, that FOMO of when you sell stocks.
What's going on, everybody, and welcome on into today's video. So in this video, we're going to be covering the sell side of trading stocks. Now, everyone likes to talk about stocks to buy and this and that. And in the last month's video, we talked about when to buy. We talked about the three-touch technique and when a stock bounces off support, areas to be able to buy a stock, trend lines. But now we want to reverse things, and we want to talk about what about the sell side. So in this video, we're going to be talking about what is resistance, how to identify resistance, when to sell a stock for maximum gains, and then how to avoid FOMO of selling a stock too early, because you're definitely going to have that come up in your own trading or investing, where you may sell a stock and you may see it go crazy. And I know a lot of people who in this situation saw Tesla going crazy and ended up selling Tesla years ago, or selling at least some of their position years ago because they thought it went up too fast, only for it to continue higher. So we're going to talk about how to cure the FOMO demons that you may be fighting sometimes when you sell a stock. And then ultimately, right, this whole strategy is going to be very, very useful, whether you're a long-term investor, whether you're a swing trader, a day trader, because using these techniques, you're going to be able to maximize your gains. Now, I also want to mention there'll be a link in the description box down below to a webinar that Joseph and I did, and we went over 3 awesome trading signals that will definitely help your own trading. So definitely check that out after this video, and let us dive into the first part, which is what is resistance? Now, what you need to know about resistance is it's really the opposite of support. It's a level on a chart that a stock won't go above. And so you may think to yourself, okay, cool. Now you may ask, what about time frames? Does it matter if it's on the 1 day, 1 minute chart? It's a very short time frame. Or does it matter if it's on the 1 year, 1 day, or the weekly chart? It actually doesn't matter. All of these time frames can be used for different styles of trading. There will be intraday resistance that you'll notice on the 1 day, 1 minute chart. And that's something that maybe a day trader is more familiar with or is more useful, right, for a day trader. Then there'll also be areas of resistance on the 1 year, 1 day, the weekly chart. So those are broader areas of resistance, and those are kind of over the course of days and weeks, you'll see areas of resistance, and that could be more useful to a longer term investor or a swing trader who may be looking to lock in gains at some point and then reallocate funds into something else. And personally for me, I am much more of a swing trader, so I love to utilize the 1 year, 1 day charts, those bigger time frames, so I can see a broader picture and get the bigger picture view of a stock. And so that helps me identify resistance and identify range based on the chart. Now you also have to understand when it comes to resistance, it's really kind of a blend of 2 different things. And I think everyone gets caught up in one side or the other, but I think the blend is where you want to be. And what is that blend? Well, that blend is a mix of just looking at charts and technical analysis and then fundamental analysis. And you may think, well, we're talking resistance, we're talking technicals here. Why would you talk fundamentals? Well, because a stock gets rejected at a certain level and doesn't go above, that's the definition really of resistance. It won't go above a certain level. It's resisting that level. There's reason for that. Maybe that's a level that if you look back on the chart to the left, you'll see that there was multiple opportunities or multiple points that we hit. And we talked about in last month's video going over when to buy a stock, the 3-touch technique of support. 3 times if a stock bounces at a certain level, that's a pretty strong area of support. Well, the same is true for resistance. And that's awesome and that's helpful, but also understand, why are there sellers there? Why is a stock not going above? Well, because maybe fundamentally speaking, that's where the stock starts to reach overvalued levels, and fundamental traders are like, hey, this isn't worth this much. It's not worth more than this amount. And so that's where you see more selling pressure. And so you have to understand that there's a blend. It's not just technicals. It's not just fundamentals. A blend is something that is very, very useful, and you want to make sure you're at least aware of both sides. So let's dive into how to identify resistance. We're going to use the 3 touches technique again. If you can touch 3 points on a resistance line, or you draw a line and you can touch 3 points, that's a pretty strong area of resistance. Now, it's not going to be perfect, and I think you need to understand that when it comes to technical analysis. It's not going to be to the exact cent every time, but we need to be able to utilize a range, and every stock is different, but we'll show you guys some examples of that range here in this video. So the first thing we want to talk about here is IWM as an example. Take a look at this chart. We're currently looking at the IWM chart as we speak right now. And as we look, what do we see right here? We have a band. And that's why I kind of talk about how it's not always perfect. And so I like to give it, give or take, a couple percent. So in this case, right, the difference here between these two lines is just about 1%. So on slower moving stocks or across broader indices, for example, IWM models the Russell 2000, right? So it's essentially modeling a lot of small cap stocks. Now, what we can do here is I like to use about 1%. So I would give or take about 1% as my band of resistance, and I would do the same thing for support. And then on stocks like penny stocks, more volatile stocks, I would give it maybe 5%, something like that. Sometimes a little bit more depending upon how volatile the stock trades. IWM is not super volatile. It's going to go between, let's say, 0.25% to maybe 1 to 2% max of a move in one day. And that's all you kind of have to worry about with IWM. So that 1% resistance or that 1% threshold is a good number to use. But I drew that 1% band in here, and what do we notice? 1, 2, 3 times. We have 3 touches to that band, to that level. And so that's telling us that we have an area of resistance. And what is that band? That's between $231 and $234. So that is our band of resistance on IWM. So that's us identifying an area on a chart that this stock, or in this example, this ETF, doesn't want to go above or hasn't gone above, and it's getting rejected at that level. And we've been consolidating for quite some time. The next example is going to be horizontal resistance, and it's very, very similar to the IWM chart, but I also want to use this stock, ticker symbol ASR. Now, in this example, what I'm going to do is I'm going to go up here and I'm going to draw a box across the areas that I see as resistance. This is actually more than just 3 touches. And in this case, we have about 1, 2, 3, 4, 5, 6. And depending upon how wide that box and that range is that I draw, it could be more. So we are seeing clearly on this chart that right around this 188 up towards about 194 or so, that's an area of resistance on ticker symbol ASR. So that's an area of horizontal resistance. We can go up to our charting tools on whatever platform we use. And in this case, we're using Webull. We can use the rectangle box feature. We can even use the horizontal line feature, draw that line in, and as long as we see 3 touches to that line, well, that's a valid level of resistance in this case. And of course, it can also be used as support. So now that's great. What about trend line resistance? So we got to talk about trend lines because we can have uptrending resistance, we can have downtrending resistance. So we want to be able to identify those as well. Let's talk about 2 examples. Take a look at this ETF, ticker symbol CORN, corn. What we're going to do is we're going to use our trend line feature here, and we're going to connect these tops, right? So we have a stock that is consolidating since, it looks like, since March to when we're filming this video. But what we can do is we can actually connect a bunch of these tops and draw this line. Now, it's not exactly to the exact cent perfect like we always say, but what do we notice here? We have 1 touch, 2 touch, 3 touch, 4, 5 touches to this line. That's a pretty significant line here in our eyes, as we've seen more than 3 touches. That's an area of resistance. This stock, as we see, has been downtrending over the past couple of months, but what we notice is that it keeps bouncing and puts in lower highs, lower highs, lower highs, and we can draw a nice trend line to fit that. So now we want to see for a reversal, for a breakout to the upside, is if this stock gets up over this trend line and holds above. So we've seen how we had a couple of these kind of false breakouts by some of these wicks of these candles. What you want to see is this stock gets above this trend line, which happens to be around, looks like $20.50, and starts to hold above $20.50. That could be what signals the move that we see to the upside and that break of the current pattern we're in. The next example we're going to use is ticker symbol SPY. This models the S&P 500. And take a look at this example. So what we can notice is the past couple of months when we were uptrending really, really nice, well, we had areas of support. I think we used this in that last video going over support when to buy a stock. Well, we can use it exactly the same way for resistance. Take a look at this. We can draw a nice uptrending line here. And what do we notice? We are now trying to connect the top of these candles on the upside because we're talking resistance. So we're looking at the tops of the candles. We have about 1, 2, 3, 4. We have multiple candles on this line. And this is an example that we can see of an uptrending resistance line with multiple touches. And what do we notice? That every time the S&P, every time SPY got up to this level, we got rejected. And many times we actually had some substantial pullbacks along the way. However, the overall uptrending resistance was intact for a couple of months. And like we said, you can use this on many different time frames. You don't have to just worry about the 1 year, 1 day chart. I think for most people, it's the easiest, the cleanest chart to see because there's a little bit less kind of crazy volatility that you get in the after hours and whatnot with a chart like this. But I want to make sure you're aware that you can utilize this on short time frames, 1 day, 1 minute, 5 day, 5 minute. You can use it on even larger time frames, weekly charts. So awesome, we can now identify areas of resistance. We have plenty of examples where that came from. Now, what about selling for max gains? Well, I'll be the first to tell you guys, if we knew, we'd be rich, right? We don't know exactly where a stock is going to stop. We don't know exactly where the top of a stock is going to be. We don't know exactly where the bottom is going to be. If we knew, right, we'd all be rich. And the stock market wouldn't be as crazy and wouldn't be as fun as it is today. But there are strategies that we can deploy. So what are these strategies? Well, one of those strategies is scaling out. And I think that that is a massive, massive key. And a lot of people always get caught up in the FOMO, which we're going to talk about here in just 1 second. Fear of missing out. What I want you to do is I want you to assume an area of resistance will hold, because you'll see that a lot of traders and a lot of new investors, they get very excited for these crazy runs, short squeezes and this and that, right? Because a lot of times you'll see short sellers that come in at areas of resistance to make money as the stock falls back to the downside. So they want to squeeze the shorts. They want stocks to break out over resistance and go parabolic and go crazy. But if you're someone who is trading a stock and you're buying at support and you're selling towards resistance, well, what you can do is you can assume that that resistance will hold. And what's that going to cause you to do? That is going to cause you to sell potentially your position. If you assume that that resistance breaks and the stock goes higher, you're going to hold your position. And if it doesn't break, you're not going to take profits when you may have had a really nice gain on the table. Now, this is best for trades and maybe not necessarily long-term investments, but I do want to tell you that you should be paying attention to this if you're a longer-term investor on a stock and you have a much longer-term, more of a fundamental approach. And here's why. While many people hold stocks for the long term and never intend to sell, there are definitely opportunities where people see other stocks, they see other opportunities, and they may want to take action. If you have no cash available, you may not be able to take action. And so if you're looking at a stock and you maybe even holding it for a year to capitalize on some of those long-term capital gains, or maybe it's been a couple weeks and the stock has moved up substantially and you want to lock in gains because you don't think that this is going to be a substantial run and you don't think it's going to hold in the long term, selling into resistance is going to be huge because you can use up and free up some capital that you can go and deploy and maybe go buy a stock at support that you like better at those levels in terms of risk reward, or you see more upside in something else. And so it allows you to take off your position. Now, if you're smart about it and you don't just sell randomly, you can time this a little bit better. Now, we can't time the market perfectly, right? We're not going to come out here and say that we can all do that and make so much money. But timing that sell up towards a resistance level could be the difference in a couple percent in terms of your gains or your portfolio, which over time can really add up. Now, how to avoid FOMO? Let's say you're in a stock and you sell at resistance and it keeps going and it breaks out and it goes higher, which is always a possibility. Now, you may be kicking yourself because you missed out on all these gains. Well, first off, you shouldn't be, but here's what you could also do to minimize the FOMO that you may feel if a stock keeps going. So we just talked about selling at resistance, but now we recommend scaling out. So what does that mean? It's not selling your entire position. That's selling a piece of your position. Maybe it's a third, maybe it's half, maybe it's 90%. Whatever you're comfortable doing, this way you leave some of your position on in case it breaks resistance and it keeps going. If it doesn't and the stock gets rejected and starts selling back off, at least you were able to lock in gains at a really nice level up towards resistance at potentially your price target. But if that resistance breaks, you have some skin in the game, you have a piece that you can ride up and take advantage of some more of those gains. And it's one of the things that I always get questions on. It's one of the things that I think a lot of people struggle with, and scaling out and even scaling in for that matter when you're buying have to be some of the biggest keys to your success as a trader or as an investor longer term, because it's going to cure that FOMO demon that you may be fighting here and there when it comes to missing out on gains. So there you guys have it. If you want to go back and refer to some of those charts, I would highly recommend you go back and refer to them. There are definitely going to be some great keys there talking about those bands, talking about the 3 touches, talking about trend lines, resistance, all of that stuff. There will also be a link down below to the trading course that Joseph and I put together. When it comes to technical analysis, we have a ton of content there, hours and hours and hours, going through much more than just trend lines, much more than support and resistance. We talk all indicators, and we even have some bonus sections on fundamental analysis. We have some trading plans, and we have a lot of stuff there that'll definitely help you in your own trading if you are interested. So check out that link, that discount code down in the description box below. If you got something out of the video, hit that thumbs up button and consider joining the community. We hope to see you guys in a future video.